Hello everyone. So today we are going to do case scenario 15 from the ICI case booklet, and this particular case scenario is from the overheads chapter from absorption costing, and it is mainly covering the topics of over absorption, under absorption, etc. So this is a very comprehensive case study. So let's start reading it. During the half year ending, that is like the end of the 6 month half year ending interdepartmental review meeting, cost variance report was discussed to discuss the performance of the departments. And for the first 6 months, so this is about first 6 months of the financial year. For the first 6 months, this was extracted. So these are the actual overheads, and it includes these following amounts: paid as per the court's order, expenses of previous year book in the current period, paid to workers for strike, obsolete stores written off. So at this point only we can judge that all of these expenditures, as mentioned in the ICI module, they will not be considered in the production overheads. So these are not the production overheads, and the cost will not be charged to the product, and this will directly go into the P&L account. So here all of these will be deducted from the actual overheads when we are doing our calculations. Now the production and sales for the next 6 months are given below. So the production is for finished goods, and there are work in progress, and the work in progress are 50% completed. So in absorption costing, we need to find out the work in progress equivalent units. Since 50% it is complete 50%, so we will multiply it by 50%, and equivalent units will be considered to be 40,000. Next we have the sale figure, that is 90,000. So we can see that there will be a closing stock as well. So whatever the question is, we can judge that here a closing stock is there, and this is the production. Now the machine hours worked during the period are 3000 hours. So this can be used, this might be used in the case study further. Now next is, at the preparation of the revenue budget, it was estimated at 50,40,000 would be the required budgeted would be required for budgeted machine hours of 6,000. So here we have been given for the whole year, this is the for the whole year we have been given the overheads. These are the overheads which are budgeted, and the machine hours are 6,000. Now we have, during the meeting, we have it has been revealed that 40% of the over or under absorption was due to defective production policies, and balance was due to increase in costs. So here this particular 40% will be abnormal, and this increase due to increase in cost, this will be normal. So for this normal increase, we will find a supplementary, we have to find usually a supplementary rate, and the abnormal is directly sent to the costing P&L. So now we have understood the case study, let us see what exactly the questions are. How much was the budgeted machine hour rate used to recover the overhead? So in the question, we are given the overheads, which are the budgeted overheads here, and this is the budgeted time. So it will be very simple, that is 50,40,000 divided by 600. So this will be equal to 840. Next we have how much of the production overhead has been recovered up to the half end of the year. So like for the half end of the year, the machine hours are 3000. So we will multiply the machine hour rate that we have calculated over here into the number of hours which are there. So that will be the actual spent. So the machine hour rate is 840, and the hours which are there, the machine hours used is 3000, and it is coming up to 25,20,000. So now the next question is that what is the amount of overheads which is over absorbed or under absorbed? So whenever we have to calculate under absorption and over absorption, we have to calculate, and we have to compare the actual overheads with the recovered overheads. So the recovered overheads have been given here, which is 25,20,000, and the actual overheads are given in the question, which is 34,08,000. But we need to deduct all of these figures because they are not overheads. As per this will not be considered as overheads. So the answer will be 34,08,000 minus 4,50,000 minus 1 lakh minus 4,20,000 minus 36,000. So it will be the actual overheads will be 24,02,000, and the recovered overheads are 25,20,000. Since the recovered overheads are more than the actual overheads, this will be a case of over absorption, and it is coming out to be 1,18,000 over absorbed. Now the next part is with regards to finding out the supplementary rate. What is the supplementary rate for apportionment of over or under absorbed overheads over all of these three? So here we need to know first of all what is exactly supplementary rate. So supplementary rate is the rate. So for example, we have over absorbed uh, overabsorbed overheads. So now whatever this like the from the overabsorbed overheads, whatever amount relates to the normal reasons, that is which has been given here, that is the attributable to the increase in cost. So this is a normal reason. So whatever overabsorbed overheads are relating to the normal reasons, that is spread over the equivalent units. Now equivalent units would mean that as we can see here, the work in finished goods are 1,10,000 and work in progress is 80,000, but only 50% of the work is completed. So it now we have to find it equivalent to the amount of finished goods. So since 50% of the work is completed, the equivalent units will be 40,000. So here we have to what we exactly have to do is, that is the overheads which are related to the normal reasons divided by the equivalent units, we find a supplementary rate, and that rate is applied to the units. So we can see here that the over absorption is 1,18,000. So 1,18,000 will be divided by 1,10,000 of finished goods plus equivalent units of work in progress, which will be 40,000. So our rate, and like this, from this 1,18,000, only 60%. Yes, only 60% will relate to normal reasons. So our figure is coming out to be 4.72, 0.47. So now we have to find out like how much of the like over or under absorbed overhead will be apportioned. Now here what we do is that we multiply the supplementary rate with the equivalent unit of whatever we are apportioning it to. So the supplementary rate is 0.472 into the equivalent units. Equivalent units will be 40,000. So the answer will come out to be 18,800.